All right, welcome back to the Halftime Report. We're answering your questions now. First up, and this is for you, Mario. It's from Jeffrey in Brooklyn. Are there any pet-related ETFs?
Well, he knows the answer to that because we started something called Pet Parents, and it's an actively managed ETF, non-transparent, which means you file your stuff at the end of a quarter like any other mutual fund. And it's run by my colleague Dan Miller, and we're focusing on the 94 million dogs and the 94 million cats and 89 million dogs and all of their pet parents and all the expenditures. And in part, we were a little behind the curve with regards to Blue Buffalo was taken over before we launched.
Okay. Josh.
Hey, Scott.
Hi.
What do you got for me?
David in Denver has something for you. Your thoughts on Blackstone. That's what he wants to know.
Well, so
why the run in the last week?
So I think that there are rumors that, well, first of all, the company's doing very well. Private equity in general is just being flooded with capital from all over the world. People think that they're above market returns are a permanent feature, and they can't wait to give more money to these companies. But bigger picture, I think there are rumors out there that Blackstone might, by the end of this year, convert to a C Corp, which is what KKR did in May, shortly after tax legislation changed. Essentially, right now, Blackstone is not paying taxes to the degree that they would on performance. And if that changes, then all of a sudden you could have a lot more owners. You could have mutual funds. You could have other institutions that won't own it will be able to own it. So if that's a catalyst, maybe it works. But I think the company's doing well anyway.
Okay, Steph, we got one for you. Jim in Orlando asks you if you're still long Stanley Black & Decker.
Yeah, I actually just got back into it when the stock had fallen 17% on the year. It's actually had a nice little rally. It's down still, though, 9%. It trades at an 8% discount to its peers, and it trades at about 15.5 times forward estimates. This is a great diversified company. They've got M&A synergies. I love the Craftsman deal. Great cash flow. You just got to be patient because this is a tariff-exposed name, and on those bad days, that's when you pick away at it.
Okay, good stuff. Jim, I got Andrew in New Jersey. Adobe.
Yeah.
Buy, sell, hold after its acquisition of Marketo.
Okay, so before we get to the acquisition, the stock has quadrupled in 4 years, and yet it still trades at a PEG ratio of 1.7. That's price to earnings to growth ratio. That's not expensive. It's not cheap, but it's certainly not expensive. The problem is, in order to maintain that PEG ratio, Adobe has to grow earnings at like 30% a year. So for that, they need to make some acquisitions like the Marketo. I like this. I think Adobe's continuing to go higher from here.
Okay. Scott in Inglewood Cliffs has a question for you.
Full disclosure, who's got it?
That would be me.
I got it. Not Donnelly.
Are you buying pot stocks?
No. Crypto and cannabis are off our radar screen. However, we have to be sensitive about what happened in Amsterdam with regards to consumption of spirits because we are a firm believer of spirits. And holy spirits are good. And independent of that, looking at what's going on in Denver and the West Coast, wine consumption, is it slowing down and so on. So that's it. It's the new crypto cannabis dynamic.
You're saying it's a negative
Are you
for
saying
spirits
it's
companies?
too speculative?
I don't know yet. I mean, we're still work in progress. I've asked this question of enough companies, whether it's Remy or Martin or...
What about Constellation?
We own a little bit of it.
Because they made an investment. That's why
I mean, if we also own Scott's Miracle-Gro, which provides the infrastructure for that. If you're going to grow the stuff and buy it, SMG is $78 or $79. But we're not doing that for that alone. We like lawn and garden care and health care for the garden.